Alright guys, we have a lot to talk about in a very short amount of time. Apple actually got bad news today, which has helped to completely flip the markets upside down. At one point today, S&P was up over 1%. Well, now it's negative about 0.25%. By the time you guys see this video, it might be a little bit different, but we have a lot to talk about. We have Fed Brainerd tomorrow. She is going to solidify a 1% rate hike or a 75 basis point rate hike. And I think that will give us the best glimpse into what the Fed is going to do on July 27th. That is next week. That is 1 week, 1 day, 23 hours, and 57 minutes away. We are going to get a change of course in the markets on that day. Either the Fed comes out and they say, hey, inflation is 9.1%. Things are not looking good. We have to continue raising rates aggressively, and that is a bad situation. Or the Fed says, hey, the yield curve is inverted. The economic data is not looking so good. It seems like inflation will come down. We have tightened enough. We're still going to raise rates 1% or 75 basis points, but we're going to slow down starting in the September meeting. That is the difference between a 10 to 15% rally or a 10 to 15% drop. But now the news we just got with Apple, well, that makes earnings that much more interesting. So we have a lot to talk about. It goes much deeper than that. Hit that like button. Subscribe to the channel if you guys have not already. Comment down below. Let me know what you guys think about all this information. What do you guys think about earnings? We're going to talk about what earnings are coming out for this week and even next week. What do you think? Market's about to drop? Market's about to rip? Let me know. And at the time of recording this video, the S&P 500 is down about 0.10%. And these charts, Apple and the S&P look very, very similar. And, that's going to be the case when Apple controls, over 7% of the S&P, over 10% of the NASDAQ weighting. Whatever Apple does, well, the markets are just going to be subject to that. And the S&P 500 earlier in the day was up about 1%. But then we got the news from Apple. They plan to slow hiring and spending for some teams in 2023. That is basically a sign to what the business is doing. You don't slow down hiring and spending if things are going good. Quite the opposite. You start to slow down hiring and spending when things are not looking so good. And Apple is seen as this bulletproof darling of the stock market, which I don't like Apple at all. I like the business, like the products, but I don't like the valuation. I don't like how big this company has gotten when we pulled up years worth of demand for iPhones, AirPods, Apple Watches, iPads, iMacs. We've pulled up all that excess demand due to stimulus checks, due to unemployment benefits. And it's unfortunate that Apple now controls so much of the markets because Apple was a very stagnant company before 2020 and 2021. They really didn't grow much, and that's why they didn't have a very high PE, because they didn't have a lot of growth. Well, these last 2 years came along, and that has been completely opposite. Like I said, pushed up a lot of demand. So it's going to be very, very hard for Apple to continue growing at the growth rates that they have been over the last 2 years. Probably will experience negative growth throughout 2022. And that's a sign and a glimpse, what they're saying here to potentially what is to come on earnings. Now, like I said, the Fed on the 27th, they could make the markets rip just off of a couple words. If the Fed comes out and says, yeah, guys, we're going to slow down raising rates, economic data, not looking so good. It's still okay, but not so good. But we have tightened enough and households need to adjust to this new monetary policy. That would be a very bullish thing, at least for the short term. And as of right now, we have one Fed speaker left until we get that Fed rate decision on July 27th, which will be next Wednesday. You have a blackout period next week and as well as the rest of this week, but you do have Fed Brainerd at 2:35 p.m. tomorrow. And what they're going to do, think about this like Fed Jerome Powell. Like, the Fed knows what they want to do. They know if they want to raise rates 75 basis points, 1%, 0.5%, or 2%. They know what the hell they want to do, but they want to communicate this with the markets. They want the markets and the Fed to be on the same page. As of right now, if the Fed wanted to raise rates by 1%, well, markets are not on board with that. only 31.5% of market participants are expecting a 1% rate hike. That would be going against what the markets are pricing in. Now, Fed Jerome Powell could tell Brainerd, yeah, go out there and say that a 1% rate hike is likely, that we need to do that is going to happen at this next meeting. Well, you would see the probability of a 1% rate hike completely flip, and this would probably go back to 85, 95%. Then the Fed would be okay doing a 1% rate hike coming next week. If the Fed does not want to do a 1% rate hike, even if they want to go, a 0.5% rate hike, 50 basis points, even if the markets are pricing in too much with a 75 basis point rate hike, well, they're going to have to send out, and by they, Fed Jerome Powell, other board members are going to have to send out Lael Brainerd, and they're going to have to tell her, basically, you need to say that we need to stop raising rates, that we've done enough tightening to get markets more prepared with what they're going to do July 27th. So that is the main thing that you guys really need to watch for coming tomorrow. But this news out of Apple is certainly not a good thing. This comes at the same time as the yield curve inversion is still inverted by 0.20. That is 20 basis points. That is not a good sign. And like Fed Bullard said last week, he pays very close attention to yield curve inversion as a signal and a sign of what is to come next. Now, if we look at the Atlanta Fed GDP tracker, you could see the latest estimate for Q2 GDP that does come out, like I said, July 28th, is negative 1.5%. So still not good. That would be a technical recession. And as far as the news we actually got today, this was not good. Two things in particular. Goldman's CEO, David Solomon, says inflation is deeply entrenched in the global economy. Not good. They reported earnings today. Them as well as, let's go ahead and pull it up. Goldman Sachs, Bank of America, Charles Schwab, a couple other banks did report earnings. Not too bad overall. It wasn't anything you could, complain at. But what we got as far as home builder sentiment was not good. So home builder sentiment plunges in July as buyers pull back. Builder sentiment dropped 12 points to 55 according to a monthly survey from the National Association of Home Builders. That marks the largest single month drop in the survey's 37-year history with the exception of April of 2020. Sentiment about current sales conditions saw the largest drop while buyer traffic fell firmly into negative territory. And believe it or not, real estate, homes, that is very important to the overall economy. Not even because what happened during 2008, but common sense here. Everyone needs a home. So if people are slowing down, buying or selling homes, it can give you a real sense of how they are spending their money. Right? If people are fearful, if they have job security fears, if people think, hey, you might lose your job, then you're probably not going to go out and rush to buy a house. And that's probably going to, spread into other aspects as well. So that is why that is very important. Now, something, and this is really key. This is what I've talked about for quite a the last couple of weeks, really, here on this channel. The dollar, you can look at this as a global fear gauge because there is no just simple peg for global currencies. Currencies are pegged against the US dollar. So what that means is when the dollar strengthens, when the dollar goes up, it means global currencies are going down. And this is bad for one reason. Imagine you are a business. You own an Amazon website or whatever the business is, and you sell products overseas, anywhere. And you will take, let's just call it wands or yens. Let's say your product you sell for $1. Well, in wands, you need to make, 500 wands to equal $1. So you charge $1 for that product, you get 500 wands. Well, what if the US dollar is strengthening right now? Whereas it's still $1, but now it takes 1,000 wands to equal $1. Well, even if people are still, buying your products, you need a lot more wands to equal that $1. So when you actually do business overseas and then convert that back into US dollars, it's not such a good thing. The conversion rate is really, really bad, and it hurts company profits. It hurts bottom lines. That's why Microsoft came out just a couple of weeks ago and lowered their guidance due to foreign currency conversions. Now, that is the fundamental aspect of the US dollar strengthening. Now, What is this actually showing you? It's a fear gauge. It's a better fear gauge than the VIX, because when people globally are fearful, they like to go into US dollars. That's why you see this spike right here. This is the COVID crash. When you were in the thick of it, the dollar dropped a lot, it weakened a lot, and then it absolutely took off after that once people got really, really fearful. And we just broke out above the COVID crash highs for the dollar, and that was around here at $28.90 per share. We hit $29.20 per share. And long story short, when the dollar goes up, stock should go down, especially when you see a big move like this over the last couple of months. When the dollar goes down, you should see stocks actually go up. So that is what helped a lot of this bullishness in the markets earlier today. And then it looks like, to me, Apple just kind of killed the party. It's like that one guy at the party that gets too drunk and wants to fight, and he caused problems. We all know, somebody that does that. And that's kind of, what is happening today with Apple. Now, if we look at bond yields are actually ticking up a little bit today, which is also not a good sign. If the Fed does continue to raise rates at 75 basis points or 1%, this means the 10-year treasuries have to go up, especially if we delay a recession. If a recession does not come here over the next 3 to 6 months, well, that means the 10-year treasuries have to come up in a big way. That's just a simple fact here. Investors have been buying the 2-year or selling the 2-year bonds, driving the yields up, and buying the 10-year bonds because they think the Fed will make a mistake, that rates will have to go down over the next 10 years. But they are selling the 2-year bonds because they're fearful about a recession. They're just fearful in general, right? So there you have that. That's pretty much it to point out. As far as oil, it's now over $100 a barrel again, up almost 4% on the day. The most important thing to point out, and the reason for this, is probably because people are concerned that Russia will not open back up Nord Stream 1, and that's the original Nord Stream pipeline, and that would be drastic. That would be terrible for all of Europe, specifically Germany and the countries that rely on Russia to a large extent for all of their energy needs. That would clap them, that would clap our markets, that would clap everybody. So this is really it. This is what you guys need to know. It does not look like Apple is going to have good earnings. It looks like they're going to forecast some very bad stuff. And just from what we're seeing today, this was not good. You want to watch Lael Brainard coming tomorrow, Fed Brainard coming tomorrow, and depending on what she says, that will give us more upside or more downside. And as far as earnings, it's going to be very important as well. Let's go ahead and call this out before we do end this video. Here in After Hours, most important earnings, IBM. They used to be, one of the world's largest companies. Obviously, not even close to the world's largest company anymore, but it will be important. For tomorrow, pre-market, Johnson & Johnson. Tuesday, After Hours, you have Netflix. Wednesday and After Hours, you have Tesla. Thursday, pre-market, American Airlines, AT&T, Domino's, Philip Morrison. Thursday, you have Snapchat. That's one I'm very, very excited for. Friday, you have Verizon, American Express, Twitter, NextEra Energy, and Cleveland Cliffs. So today in After Hours, IBM. Tomorrow, pre-market, Johnson & Johnson. Tomorrow, After Hours, Netflix. Those are going to be the earnings that will move the markets over the remainder of today as well as tomorrow. So thank you guys for watching. Hit that like button and subscribe to the channel. Let me know down below in the comment section, what do you guys think? What is your predictions over the next couple of days, next couple of weeks in the stock market? Does the Fed pivot? Do they show us that they are going to stop raising rates as aggressively, or tell us that they are going to slow down or stop raising rates? That would be a bullish thing. That would send the markets up. If we don't get any of that, markets are probably going down. That's my opinion. Let me know what you guys think about that down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.